Hi, I'm Lindsey Bell, Chief Investment Strategist at Ally Invest. The market's popping this morning, that's for sure. And there's a mix of information, positive information, that is driving that move. Most of it's related to vaccine news from Pfizer, but also there's been the removal of election uncertainty over the weekend and positive export data out of China, which showed strength in shipments to the US. Now, if we look at a chart of the S&P 500 here, we see the S&P 500 reaching a new all-time high today, surpassing the last all-time high, which was just in early September. So this is a big bullish move that we are getting this morning. We also have the Nasdaq and the Dow up, though they haven't quite reached their prior 52-week highs. So we'll be keeping an eye on those moves for sure. Now, the Pfizer vaccine, it's big news. It means that the economy can return to more of a normalcy. The recovery can potentially accelerate, but what does it mean for the market? Also, the market is historically a forward-looking mechanism. So it prices in what expects to be coming down the pipe. And this vaccine means that the economic environment can really accelerate. It can be an accelerant to the recovery story, exactly what investors have been looking for a very long time. It dovetails nicely, by the way, with a lot of the economic data that we've been seeing more recently. Last week, we got jobs data that was better than expected, more people re-entering the job market. Manufacturing data came in better than expected. Spending data has been good. The consumer seems to be feeling good. But after a pop like this, it's always good to take a little bit of a pause, let the dust settle a little bit, because every rally has its own risks. And the risks, I think, that exist within the rally that we're seeing, especially today, relate to the vaccine. And that is the distribution to the vaccine. We don't know exactly what that's going to look like for 2021. Is it going to be a long period? Is it going to stretch into 2022? How accepting are people going to be to taking the vaccine? That's another question that we definitely have to consider. And then, of course, we want to know more about treatments as well, too, because COVID cases are spiking. So the more treatments that we have for those folks that do get this virus, the better, right? Now, while we always want to be mindful of the risks, I will say that as I think about the future, and I've talked about it a lot, the strength of the consumer versus where they were entering the pandemic. And the way I think about it is potentially the consumer could create a floor for any pullback that we get after this huge pop. And I think the tell will be in the holiday spending season. Because if the consumer's feeling super optimistic about a new president in the White House, as well as the potential for a vaccine as we enter the new year, that means their spending could continue to remain elevated into the end of the year. And that would certainly be a positive for the economy as well as corporate profitability. So that's something I'm going to be keeping my eye on, because the consumer votes with their dollars and they don't lie. So keep your eye on that too. But I will say this is a bit of a game changer, like I started this video off with. What does that mean? That means you need to reevaluate your portfolio. Is it prepared for a significant economic recovery to take hold next year? And while that may or may not happen, we're leaning towards the case that it's more likely to happen now than it was before. Is your portfolio reflecting that? Are you exposed to some of the sectors, the industries, or the stocks that will benefit from an acceleration in the recovery story? And also, what about the winners that you've had in your portfolio? They can continue to win. Tech is a sector that we have liked for some time now, but they might be taking a breather near term. Does it make sense to take some profits in those winners and consider investing in some of the stocks that had been losers over the last several months? We think having a defensive exposure to technology as well as some of the other sectors still makes sense, because there is a lot of uncertainty around the vaccine, the reopening story, and even stimulus is still needed for this economy and for sectors that are popping today, like the airlines, for example. So that's something that we'll be keeping our eye out for. It's great news that we're getting this morning, and we're very pleased to hear it. We think it's time for you to consider to reevaluate your portfolio and stick with us, because I'm here for you to help you through all these crazy times that we've been through over the last 8 months. Thanks for your time today.